Hey, thanks for tuning in. In this video, I'm going to discuss how to size your portfolio for swing trading. I'm a swing trader. I'd say just like in poker and trading, right? How you bet and how you react to what other players are doing and what the market is doing is all part of how good of a trader or poker player you are. One analogy I like to say often, right? You can't go all in on every hand and never fold and expect to win the tournament. That's a recipe for failing, but for whatever reason, our egos love to go all in on every idea that we have, like buy one time 100% of my portfolio and then just never fold, right? Like, be comfortable with the risk, get married to an idea, and in poker, you can't really do that, right? You have to fold. And the best part about the market is like you can definitely size a bet properly, understand what your risk is, how far from risk you are, and take on that risk. Like, we are in a risk-taking business. You'll never have a risk-free trade. There will always be some risk, and you just have to be comfortable with that risk. So what I'm going to give you in this video today, I'm going to try to keep it brief, is how I size my bets. Not every stock and ETF is the same. For example, I like to keep the risky growth stocks bet to no more than 20% of my portfolio, and some people would think that that's still pretty high. But again, and that's an aggregate for all of them, right? I love to also have some type of commodity or inflation hedge around 20%. The last year, oil has been working great in that particular slot. And then the tech growth stocks and ETFs take over the remaining open slot in my roster. And I love to have ETFs take up like 30 to 50%, in some instances even 70% of my portfolio. If I take, for example, like TQQQ, right, at a 30% position, and I hold that for 3 months for a 60% gain, compounded twice, I'm okay with that starting out at 20 to 30% and watching it grow to 40, 50%, something like that, and then liquidate. I also think that, if you're playing a triple leveraged ETF, that you have to be very, very quick to cut it. You have to sell into strength. The downside risk is not worth it. But again, like if you were playing QQQ, one could even argue, you can give this ETF to like your grandkids. It's not going anywhere. I mean, tech's going to be here for a long time. SPY, same thing, right? So like, taking a 30%, 40% portfolio position in SPY, is not the same thing as like buying, 20% in Bitcoin or 30% in Bitcoin or 40% in Bitcoin. These things are different, and you have to take into consideration that the ETF risk is just not the same as owning an individual stock. So I like to hedge my risk, a lot of the time by having a large chunk of my portfolio active in the ETFs that I see getting the most love this particular month and quarter. I try to keep a quarter perspective. So one other thing that I also like to keep, like rule number one above all else, is to cut your losers quick and not allow really more than a 10% loss. So like, let's say you take like a really risky bet in something like a Bitcoin, and it's 20% of your portfolio, and you take a 10% hit. You just lost 2% of your portfolio. I think one of the best rules anyone has ever taught me is never lose more than 1 to 2% on any trade. So that's like, rule number one at the top of my list. It goes hand in hand with cut your losers quick. It goes hand in hand with if you keep the losses small, you'll make a lot of money in the long run. All these things are saying the same thing. So that's how I kind of keep that risk low. And again, to get like a 10 to 20% drawdown in something like QQQ or SPY or SMH or IWM or something like that, it's going to take a couple days, right? You're going to have time to get out. For something like Bitcoin to move 10%, it can happen overnight. So again, the speed of the vehicle has a lot to do with how you size your bet, and understanding that, like, if you oversize, right, the risk is that you'll micromanage and overtrade. You can't overtrade. You have to buy Riot at $3 and let it run to 70. Right? This is how you make the big swing trades. And again, that comes down to riding the trend. It doesn't come down to a profit target. It doesn't come down to predicting the future. It comes from being on the right side of the trade, being sized properly so that you can tolerate the risk, and letting the trend work itself out over time. And if you're sized properly in something like oil, and you watch ExxonMobil double over the course of 4 months, it's like, I watched 20-30% of my portfolio quickly become 30 to 40% of my portfolio. And you can ride a winner a lot easier that way, and ideally, even if you size like something like a Riot at 10% and you're willing to tolerate a 2% loss, right, you're willing to go down 20% on your bet from entry. And most of the time we're going to have good entries. I'm not going to give you horrible entries, and if they're bad, that we'll likely get stopped out in a couple days. We're not going to sit in a trade day after day after day just taking it on the chin. So you take into consideration all of that, right? If you size like a Bitcoin, a Riot, like a Tilray, something like that properly, and you watch it go up 500, 1,000%, even if it's sized at like 5% of your portfolio, you can watch 5% of your portfolio become 20 to 30% of your portfolio. And the downside risk, right? You could even lose all of that and still survive. Like 5% isn't the end of the world. And in some markets, you will have times where you lose 5% on the year. And so, I do believe that the riskier the bet, the smaller the portfolio size you can allocate. And I do also, I guess to wrap this up, I do believe that you always have to have cash on the sidelines so that you can make another play. You don't want to ever be 100% in. And you also, want to recognize that like ETFs are not the same thing as stocks. Triple leveraged ETFs are not the same thing as ETFs. And meme stocks are not the same thing as like your blue chip stocks, your Amazons, and your Nvidias, your Crowd, your Shopify. These things have been in going to infinity patterns forever. These companies are likely not going anywhere for the foreseeable future. So you can size differently, and I just want people to recognize that like a lot of what it has to do with holding a winner and cutting a loser, all that, having the right mental mindset for a swing trade comes with the position sizing. So just keep that in mind. Scale into your positions, scale out of your positions, ride the trends. Treat every bet unique, and recognize that if you do follow this kind of like betting strategy, this system towards sizing a position, not allowing a 2% loss or more, you can play the game for a very long time, and that's really the key to success here. So if you like the content, subscribe, hit the like button, come check us out on Twitter at MarketWizard87, and I'll see you in the next video.